If you are holding XRP right now, you need to hear what Michael Saylor just said. I am not exaggerating when I say I genuinely did not expect this. And if you have been following Saylor's stance on Bitcoin for any length of time, you are going to understand why. Hit subscribe and turn on notifications because what we are about to break down changes the conversation in ways most people have not fully processed yet. Welcome to Wealth Chain Network. I am here to walk you through what just happened, why it matters, and what it might mean for XRP holders moving forward. This is not hype. This is not speculation dressed up as analysis. This is a serious look at a statement that came from one of the most influential voices in the entire digital asset space, someone who has been unambiguously, publicly, and often aggressively skeptical of anything that is not Bitcoin. Until now. Before we go any further, let me be completely transparent about something. Everything you are about to hear is for informational and educational purposes only. Wealth Chain Network does not provide financial advice. Nothing in this video is a recommendation to buy, sell, or hold any asset. Cryptocurrency is volatile. Prices can and do move dramatically in both directions. You can lose money. You should always conduct your own research and consult with a qualified financial professional before making any investment decisions. We are here to inform you, not to tell you what to do with your capital. Now, let us talk about what Michael Saylor actually said, because the context matters just as much as the words themselves. Michael Saylor is not just another voice in crypto. He is the founder and executive chairman of MicroStrategy, a company that has committed billions of dollars to Bitcoin and has become one of the most visible institutional holders of the asset. Saylor has built his entire public persona in recent years around one central thesis: Bitcoin is the only digital asset that matters. He has been dismissive of altcoins. He has been critical of Ethereum. He has argued, repeatedly and publicly, that anything other than Bitcoin is either a distraction or a fundamentally flawed attempt to replicate what Bitcoin already does better. This is not a subtle position. This is not someone hedging. This is someone who has staked his reputation, his company's balance sheet, and his public credibility on the idea that Bitcoin is categorically different from everything else. So when someone with that profile, as someone who has spent years drawing a bright line between Bitcoin and everything else, makes a statement about XRP that does not follow that script, people pay attention, and they should. What Saylor said was not an endorsement. Let me be very clear about that, because I think clarity is more valuable than hype, and I do not want anyone walking away from this video with a misunderstanding of what actually happened. He did not say he is buying XRP. He did not say MicroStrategy is adding it to the balance sheet. He did not suddenly pivot and declare that XRP is the future of finance. That did not happen, and anyone telling you otherwise is either mistaken or being deliberately misleading. What he did say, and this is where it gets interesting, is that he sees a use case for XRP that he does not see for most other altcoins. He acknowledged on the record that Ripple's approach to cross-border payments addresses a real problem in a way that is functionally distinct from what Bitcoin is designed to do. He made a distinction between assets that are trying to be Bitcoin and assets that are trying to do something else entirely. And in making that distinction, he placed XRP in a category that he does not place most other projects. Now, if you have been around crypto for a while, you know that this kind of nuance often gets lost. People hear what they want to hear. Bulls take any positive comment and amplify it into a full endorsement. Bears dismiss anything short of a complete reversal as irrelevant. But if you actually sit with what was said and think about it in the context of who said it, the significance starts to come into focus. Saylor is a maximalist. His entire thesis is built on the idea that there is one apex asset, Bitcoin, and everything else is noise. For someone with that worldview to publicly acknowledge that another asset has a legitimate differentiated use case is not a small thing. It does not mean he has abandoned his Bitcoin maximalism. It does not mean he thinks XRP is going to replace Bitcoin or even compete with it. What it means is that he sees the landscape clearly enough to recognize that not all altcoins are created equal, and that some of them are solving actual problems rather than just riding narrative momentum. Why does that matter? Because the crypto market has spent years in a state of tribal warfare where every project is evaluated primarily on whether it threatens Bitcoin's dominance. And that framing has been unproductive. It has led to a situation where serious projects with real utility get dismissed simply because they are not Bitcoin, even when they are not trying to be Bitcoin. Ripple has never positioned XRP as a competitor to Bitcoin. They have been very explicit about this. XRP is not trying to be a store of value. It is not trying to be digital gold. It is designed to be a bridge currency that moves value efficiently across borders in payment corridors where Bitcoin's structure is not optimized for that use case. Saylor acknowledging that distinction, even implicitly, even in a limited way, creates room for a more mature conversation about what different assets are actually for. And that conversation benefits projects like XRP that have spent years building real infrastructure, but have struggled to get a fair hearing in a market that was not ready to think past the Bitcoin versus everything else framing. There is another layer to this that I think is worth unpacking, and it has to do with institutional legitimacy. When someone like Saylor speaks, institutions listen. Not retail investors scrolling Twitter looking for the next trade. Institutions. The kind of capital that moves carefully, that requires regulatory clarity, that does not chase narrative, but responds to fundamental shifts in how assets are perceived and categorized. Saylor's comments, measured as they were, signal to that kind of capital that it is acceptable to think seriously about XRP's use case without being dismissed as someone who does not understand crypto. That might sound like a small thing, but it is not. Institutional capital is extraordinarily sensitive to reputational risk. It does not want to be the first mover on something controversial. It wants permission structures, it wants signals from respected voices that a particular asset or thesis is intellectually defensible. Saylor providing that signal, even indirectly, lowers the barrier for other institutional voices to acknowledge what many of them have already been thinking privately, that Ripple has built something real, that XRP's use case is not speculative, and that the regulatory clarity it now has makes it a fundamentally different proposition than it was 2 or 3 years ago. Now, I want to be careful here because I think the worst thing we can do is overinterpret what was said and build expectations that are not grounded in reality. Saylor has not become an XRP advocate. He is not about to start talking about XRP the way he talks about Bitcoin. His core thesis has not changed, but the fact that he felt the need to make a distinction, to acknowledge that XRP is doing something different rather than just dismissing it as another altcoin, that tells you something about how the broader conversation is evolving. It tells you that even the maximalists are starting to recognize that the digital asset space is not a zero-sum game where only one asset can have value. It tells you that utility is starting to matter in a way it did not matter when the entire market was driven purely by speculation and narrative. For XRP holders, the question is what to do with this information. And the answer, I think, is the same as it always is in this market. Stay grounded, stay informed, and do not let one data point, even a significant one, override your broader analysis of what is happening. Saylor's comments are meaningful. They add legitimacy. They open conversational space. They signal to institutions that it is okay to take XRP seriously, but they do not change the fundamental work that still needs to happen for XRP to reach the kind of adoption and valuation that its most optimistic supporters believe is possible. That work is ongoing. Ripple is still expanding its network. Institutions are still onboarding. Regulatory frameworks are still being finalized. The story is not finished. It is, if anything, entering a phase where the real utility has to prove itself at scale. What you should be watching is not whether more maximalists soften their stance on XRP. What you should be watching is whether the utility that Ripple has been building continues to grow. Are transaction volumes increasing? Are more financial institutions integrating on-demand liquidity into their payment flows? Is the regulatory environment continuing to move in a favorable direction? Those are the questions that will determine XRP's trajectory over the next several years. Saylor's comments are a tailwind. They help, but they are not the story. The story is whether XRP can deliver on the use case it has been promising for years, and the early evidence suggests that it can. There is one more thing I want to say, and it is something I come back to often because I think it is one of the most important lessons in this entire market. The assets that perform well over meaningful time horizons are almost never the ones that everyone is talking about when the conversation is loudest. They are the ones that are quietly building infrastructure, solving real problems.